Welcome to Market Movers. I'm Jim Uriel with Scott and Martin.
Hi, Jim.
Okay, so it was a week ago. The yield curve started to invert, caused a little bit of a mini panic. Everyone talked recession. Now we have the unemployment numbers coming out on Friday. Now those recession fears seem to have abated some. Is the numbers big enough? If they're bad, are they going to bring them back?
Well, they might, but is it the bad thing? Because now it seems like, Jim, the market has resigned itself to think that the Fed's here if it does come back as far as the recession fears. So the market, to me, is in a little bit of a nice sweet spot here where maybe bad data isn't so bad. Good data is still good.
To put a finer point on what you said, when we talked about recession, 10-year yields made a huge move lower. So yeah, I agree with this. So is the Fed on hold, regardless of what the number is? Even if it's a good number, can we believe the Fed's not coming in anytime soon?
I believe so, and I think that's a relief for the market at least because it doesn't have to be so stringently data dependent, and therefore even if a stinker number comes in again like it did last month, not a big deal.
Now before we dive into our trade discussion, I'd like to point out that these are examples, not trade recommendations or advice. The underlying's trading about 28.75. The expectations for the Friday unemployment number are about 180K, like they always are. Scott.
We're like always are. I mean, they never are, by the way. I mean, There's been like 1 month in the last 12 where they've actually hit the expectations. But that's probably fine because, like I said, Jim, earlier, I believe the market's in a decent sweet spot here. There's enough kind of bidders, buyers out there, however you want to call it, that seem to want to drive up price, at least for the near term. So specifically, Jim, just taking a look at charts and finding some maybe resistance levels here where I believe the market could chase itself up to in the next couple weeks. So those would be, as an example, today, buying the week to April 29.25, 29.50 call spread for about 3.5 ticks. This trade expires April 12th. It risks $175 to make potential 1075. The underlying you mentioned about 28.75. Just if we retrace a little bit more back up to those all-time highs on the S&P, I think that's a potential example you could put on to take advantage of.
Underline that point, back up to those old highs, that 29.50 level that you mentioned as the top part. That's a very significant part. So I actually like your trade a lot because I think we could get there without making any sort of huge decision we're breaking out. I'm looking at it a little differently and a little more aggressively this time. That's buying the week to 2900, 29.25. So now it's a call spread that's exactly 25 ticks under yours and the same wide for 6.5 ticks. Expires April 12th as well. Risks 3.25 to make 9.25, and what's reflected in that price is the more likelihood that it fills out.
Correct. Good expression. I like. Welcome to my side of things. Obviously, I like being on the same side of you as far as expression. Bullish. Just the wrong levels, in my opinion. I like the fact that with mine, it's a little cheaper, as you mentioned, and it's one of those that you can still put on and manage, but it does have that ability to maybe chase up to our old highs, where I believe the market will eventually hit some resistance.
Okay, so 180s, like we said, is the number that everyone's expecting, but we never get that. What number would be considered a disaster where rates would go down even quicker and maybe that could boost the stock market as well?
2 points to that. I think anything sub, say, 100 is a disaster, plus no positive revisions to the prior month, which were weak anyway. But watch wage growth too, my friend, because that's been ticking up alongside some of these weaker numbers. That could motivate the Fed later in the year.
No doubt about it. Thanks for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.